What is going to happen to home prices across the US? This is the $1,000,000 question, the question I get asked all the time. Should I buy now? Should I wait a few months? Am I going to get a better deal later in 2023? Should I wait until next year? In this video, I'm going to go over what you need to track and what's going to affect home prices the most towards the end of 2023 and into 2024. Stay tuned. All right, so everybody wants to know what's going to happen with home prices. Will they continue to go up? Because as we've seen in 2023, against all odds, home prices have gone up. Will they go flat or will they decrease? Now, I'm going to tell you what metrics to look for. We don't know what's going to happen with inventory. We don't know what's going to happen exactly to mortgage interest rates. But these are a couple of the levers. They're going to dictate what happens to home prices. Let me give you an example. If we continue to have anemic, very low levels of inventory, it's very hard for home prices to come down. It's even hard for home prices to stay flat because with limited inventory, even if we have higher mortgage rates, even if we have less demand, when there's very little inventory, even with less people chasing that inventory, there's still enough demand to be chasing that inventory to be pushing up on home prices. And just to give you an idea on how anemic, how, little inventory we have in the real estate market, there's a graph. And you know what? Maybe I'll pop this one up to share it. Just shows you of what inventory looks like, not only year over year, down 7.5%, 23 versus 22, but compared to 2019, down 50%. These last 3 years, 21, 22, and 23, inventory levels have been so low. That's what's continued to push home prices up. All right, hopefully you can see that. What we have is the red line is showing active inventory in the 100,000s, right? So this is 470 or something. It looks like it's not quite to halfway between 400 and 600. So it probably starts the year with 470,000-ish active inventory, homes for sale. And it's not really increased at all. It's actually decreased in a normal market, right? Like 2018 and prior, that active inventory will slowly start to increase halfway through the year, and then it peaks. What is week, 36 through 40, August, September, and then it comes down. Active inventory decreases as you get into the later parts of the year. Like that's a normal curve. And, active inventory has gone down because, the beginning parts of the year, spring buying season come and the stuff gets bought up fast, right? And that's what's caused, not new listings coming and the current ones being gobbled up, which is what caused this downward curve in active inventory. But even if you look at 2022, and this was probably an anomaly as well, rates went up, demand side froze, active inventory went up. So this is what I'm going to tell you, just a real quick and dirty way to predict what prices will do the second half of 2023. If we see a big pullback in demand because of interest rates increasing, which they have, this inventory increase like we saw in 2023-22 should see a somewhat similar increase in housing inventory in 2023. If that happens, home prices will flatten or decrease. And I'm not talking 30%, 40% crash because there's just not going to be enough inventory added or active inventory that is the result of homes being listed and not selling, right? Staying on the market creates active inventory. We already know that more inventory is not coming on, like the newly listed stuff isn't going to happen at a more rapid pace. It's just going to be more active inventory because stuff sits. If we see that in the second half of 2023, like we saw in the second half of 2022, that will cause more seller concessions, prices to come down, right? Interest rates play a factor. If interest rates come down 0.5%, if the Fed continues to see inflation coming down and they pause, even if they talk about doing rate cuts in 2024 towards the end of 23, that's going to cause upward pressure on demand. And when demand goes up and supply is still relatively scarce, that pushes home prices up. So watch mortgage interest rates, which directly affect demand. The lower the interest rates, the more demand there is. And then watch active inventory. Active inventory is really going to tell the story. That is what's, really stopped home prices from having any real significant downturn, right? If we were in a market like we saw 16, 17, 18, a normal market with normal amounts of inventory, we would have seen a 15, 20, 25% decrease in home prices because of affordability, because of higher interest rates, because it costs more on a monthly basis for a consumer to buy the same priced house, because there's limited inventory and there's not much to choose from. Even with demand down, home prices have remained rather stable in most parts of the US. So hopefully this was helpful. Let me know any questions, comments, concerns you have below. And until next time, we gonna see.